First, we need to understand the market environment that's setting the stage for this potential breakout. The broader crypto landscape is entering a critical phase. Bitcoin has been consolidating for weeks, setting up what many analysts believe could be a powerful continuation rally. Ethereum is quietly gaining traction with new developments in decentralized applications, while the Altcoin market, often referred to as where the magic happens, is showing early signs of rotation. Historically, whenever Bitcoin stabilizes and dominance begins to cool off, liquidity flows into altcoins. That rotation creates what many traders call mini bull runs in smaller tokens. These phases are where fortunes are made. Market sentiment has also shifted dramatically in recent weeks. Institutions are showing renewed interest in digital assets, regulatory clarity is improving in key markets like the U.S. and Europe, and narratives around artificial intelligence, tokenization, and real-world asset integration are fueling a new wave of excitement. Add to that the fact that social media hype cycles are once again heating up, and it's no surprise that analysts and influencers are starting to hint at coins that could be on the verge of breakout runs. So why specifically 41 days? In crypto, time-based setups are critical because events, not just prices, drive momentum. Over the next 6 weeks, several major catalysts are scheduled to take place: project upgrades, new exchange listings, token unlocks, and major protocol partnerships. These are the kinds of announcements that often ignite sudden, double-digit rallies. And when two coins line up with confirmed catalysts within that window, traders start paying attention. Now, let's talk about the first coin. We'll call this OneCoin, an established mid-cap altcoin with real technology, strong backing, and a major event on the horizon. Coin has already proven itself in the last bull cycle but has remained relatively quiet through the bear market, slowly building its ecosystem. Over the past few months, whispers have emerged about a significant protocol upgrade, one that could dramatically improve its scalability and reduce transaction costs. Leaked developer notes and GitHub activity suggest the upgrade is nearly complete, and insiders believe it could be announced publicly within the next month. If that happens, this coin could see a surge in demand similar to what we saw with projects like Solana, Chainlink, and Avalanche when they unveiled major network improvements. Beyond technology, Coin's community has been ramping up social engagement, hinting at an October to Remember campaign on social media. Marketing plays a crucial role in crypto cycles. Attention drives liquidity, and liquidity drives price action. If the announcement coincides with renewed retail interest, Coin could be one of those coins that go from quiet consolidation to headline-grabbing returns almost overnight. Traders who are watching closely believe the 41-day mark could align perfectly with this rollout, meaning the window to position early is closing fast. On the other hand, the second coin B represents a completely different playstyle. This is the underdog, a smaller, newer project with an explosive community and a high-risk, high-reward profile. These are the types of tokens that often make the biggest headlines because of how quickly they can move once hype kicks in. Coin B's narrative combines two of the hottest themes in crypto right now: artificial intelligence and decentralized finance. Its roadmap includes an upcoming token launch event, new staking pools, and a major decentralized exchange listing expected in the next few weeks. These are textbook catalysts for a short-term parabolic move, especially if the broader market remains bullish. What makes Coin B especially intriguing is its community-driven nature. The developers have managed to build one of the most engaged online followings in the Altcoin space, with thousands of active Telegram and Discord users. Community enthusiasm is often the heartbeat of explosive projects, and the early chatter indicates that influencers are beginning to notice. Some have even compared the potential of Coin B to early-stage projects like Pepe or Shiba Inu before their massive runs, with one major difference: Coin B actually has real use cases and functional utility. Now, what could actually trigger this surge? In the case of Coin, it's likely to be a network upgrade or partnership announcement. The project's developers have hinted at collaborations with major blockchain data providers, which could expand its adoption across multiple ecosystems. A confirmed partnership or integration could instantly validate the project's long-term potential and attract institutional interest. Coin B's trigger, on the other hand, is almost certainly event-driven. The launch of its staking platform and decentralized exchange listing could cause a rapid influx of liquidity and volume. Historically, tokens listed on top-tier exchanges have seen price spikes of anywhere from 50 to 200% within the first few weeks. If we zoom out, both of these coins exist within a market that's starting to favor aggressive speculation again. Altcoin season appears to be approaching the period when traders rotate profits from Bitcoin and Ethereum into smaller, riskier assets. The last time this happened, multiple coins delivered 5x to 10x returns in under 2 months. Combine that environment with clear, time-sensitive catalysts, and it's easy to see why some analysts are convinced these two coins are about to explode. Of course, no potential rally comes without risk. The crypto market remains one of the most volatile on the planet, capable of incredible highs and devastating corrections. For Coiner, the biggest risk lies in disappointment. If the rumored upgrade gets delayed or underwhelms, momentum could evaporate quickly. For Coin B, the danger is even greater. Smaller projects often experience pump and dump cycles, where early buyers take profit and leave newer investors holding the bag. Liquidity risk is also a concern. With smaller market caps, even modest selling pressure can send prices plunging. There's also the broader macro picture to consider. Regulatory headlines, global economic shifts, and even social media trends can dramatically alter market sentiment in a matter of hours. In such an unpredictable environment, having a clear plan becomes essential. Traders looking to capitalize on this 41-day window should approach it like a strategic mission: enter early, scaling carefully, and never risk more than they can afford to lose. Setting stop-loss levels, tracking on-chain data, and staying updated on official project channels are all smart moves. For those watching closely, the timeline for this potential breakout could look something like this. Over the next 2 weeks, expect early hints, teaser tweets, cryptic marketing posts, or leaks from developer accounts. These are usually the first sparks that ignite community buzz. By week 3, if the rumors gain traction, expect media coverage and influencer mentions to push awareness higher. That's often when volume begins to climb and prices start moving. Around week 4 or 5, we hit the main event, the official announcement, upgrade, or listing. If the catalysts align, this is when both coins could see explosive upward momentum. And by week 6, prices typically consolidate, either holding their gains or pulling back slightly as traders take profits. Timing, therefore, is critical. So how should someone prepare if they believe in the two coins in 41 days theory? It starts with research. Don't just chase hype, dig into the fundamentals. Check each project's roadmap, audit reports, developer activity, and exchange listings. Look for signs of growing wallet addresses and transaction volume, as these are indicators of genuine adoption. Watch whale wallets for accumulation trends. Large transfers from exchanges into private wallets often signal strong hands preparing for a move. Once you're confident, consider scaling in gradually rather than going all in at once. Crypto rewards patience and precision. Equally important is having an exit strategy. If either coin begins to pump sharply, decide in advance how much profit you want to lock in. Many successful traders take out their initial investment once they double their money, letting the rest ride risk-free. That way, even if the market reverses, they've already secured a win. Remember, in crypto, protecting capital is just as important as making gains. Now, to address the elephant in the room, is it realistic for two coins to explode in 41 days? Absolutely, but only under the right conditions. History is full of examples where coins have surged in even shorter timeframes. Solana jumped 400% in just over a month during the 2021 DeFi boom. Pepe coin did a tanks in a matter of weeks. When catalysts align with narrative momentum and a supportive market backdrop, the results can be dramatic. The key difference between those who profit and those who miss out often comes down to awareness and preparation. At the same time, this isn't a call for blind optimism. Many traders lose money chasing every next big thing. The smart move is to treat the two coins 41 days thesis as an opportunity to apply disciplined analysis. Track the projects, set alerts, and monitor social trends. If the technicals and fundamentals begin to align, rising volume, growing community activity, and clear catalyst dates, then it might be worth taking a small, calculated position. But if the hype feels manufactured or the fundamentals look weak, there's no shame in staying on the sidelines.